Howdy folks, welcome to yet another edition of Smarter Money Matters. It really does. With me, your wealth doctor, joined by our super CIPs today, Andrew Wunderlich and Vrcelj. Thank you so much for joining us. And we just wanted to give you, as January of 2026 concludes, kind of what our market observations are about what's going on in the world. A lot of big changes, a lot of things going on now. And let's talk, I guess, beginning with what's happening with the dollar. Any initial observations from those of us, our citizens or those of us north of the border?
Yeah, north of the border, definitely the Canadian dollar has been, kind of shrinking that gap in terms of where the U.S. dollar is compared to the Canadian dollar. So,
which means the U.S. means the greenback is plummeting compared to the loonie.
That's what it means,
right?
Yes, and that's not the only currency that it's plummeting, compared to.
Yeah, so basically, the pricing of the dollar vis-a-vis other currencies is a really complicated operation. And what's made the news recently is potential intervention by the United States government to help shore up the value of the yen, which has been falling, to keep the yen stronger. But that's not really all there is to it, right? We see this in a lot of different manifestations, like the cost of gold, which is just going through the roof, right? Mm-hmm. And Lou, as you know, when the dollar, goes down, what happens to the cost of gold?
It goes up.
In dollar terms. Yeah. It may not go up in German marks or other currencies, but if the dollar is falling, say gold remains constant, across different currencies, if the dollar is going down, it takes more dollars to buy an ounce of gold, right?
Basically, it becomes more expensive.
And I think there's a lot of reasons. So let's segue into gold. You guys have been getting a lot of input from clients about the soaring gold and silver markets, and we actually have taken a position in precious metals quite some time ago, which has done well, primarily in sector or macro. Is that right?
Yes, ACP also in our conservative portfolio.
Which is active capital preservation. And when do you remember when we took those positions, Anna?
I know that some of them had been in there since early last year, and then I believe in the fall we added some gold mining exposure as well.
All right, so we got a really, really good pop through 2026, accelerated by the gold miners in the fall, and gold recently hit a record, I think, of 5,000 ounce, something like that, right? Mm-hmm. So tell me, Lou, what are clients asking you about gold?
But just basically, where is it going to go from here? It's all-time highs right now, and it's anytime you kind of reach those heights, that territory, there's that possibility for a pullback. But our indicators are still bullish on gold in particular, and so we're still staying.
You're bullish on bullion, as it were, eh?
But we're still staying invested, but obviously keeping a close watch on if that momentum starts to shift and go away, to react accordingly. Yeah.
Do you have any further comments on that, Ms. Wunderlich?
Yeah, I've had a lot of clients asking the past few weeks just about some of the geopolitical concerns and how that is driving gold up as well. And just kind of, our place in the world with some of our, various allies and trade partners. And a lot of countries, some countries are considering maybe decreasing their position in treasuries and investing in something like gold, another, precious metals, things that hold value. And so again, that's been a big part of our conversations.
It's actually, that's a very salient point, that a lot of U.S. treasuries, basically U.S. government debt, which has forever been viewed as being riskless and probably the most solid thing you can buy, and a lot of foreigners and foreign governments have stored their wealth there. Well, that's changing for a lot of reasons. First of all, the value of the dollar goes down against their currencies. They're losing money on the bonds. There's a lot less confidence in the United States for a lot of the geopolitical changes. In the strategic, the geostrategic map. It seems like the world's being divided into really three areas of empire, right? Asia, Europe, maybe with Russia's designs on it, the United States and the Americas. So there's a lot going on there, and that's a big thing. Governments have so much money that if they're investing in gold, that really can skew the market to drive things up big time. And there's a lot of this is being driven by the so-called debasement trade. And what does that mean? Debasement means that the value of the dollar becomes less and less valuable for a lot of reasons, but one concern the world around is soaring government debt. The U.S. government debt is now at levels that haven't been seen since World War II. It's probably going to tip beyond that. Social Security is on its skids. When that goes, becomes insolvent, parts of it do. Some bad things are going to happen, including the need for yet more debt. And that's not limited to the United States. That this is an issue that is many governments around the world are facing, and increasingly Europe. And you're the fatherland of of your heritage. Germany, who's got one of the lowest debt levels in the world. What's going on in Germany now? Why are they facing massive debt?
I mean, a lot of these European countries are having to foot more of their military bill. I think that's a big thing that can possibly cause their debt to go up, as with the new administration saying, hey, we're not going to pay all of NATO. You guys need to pay your fair share.
Yeah, or we may have to bomb Greenland if you don't like it, Denmark. We may bomb you. So gosh knows what's going to happen. Trump is he's
playing by his own rules.
Well, he's very difficult to read. He's a lot of head fakes with that guy. Who knows what's going to happen? But nonetheless, Europe is facing a threat that has not been seen since the Second World War with Russia this time, and they're having to gear up regardless of U.S. involvement and participation in NATO. They're going to have to pay for a lot of their stuff, and that's going to drive them deeply down. And remember, Europe has one of the most extensive social not networks, safety nets in the world. I mean, they've been welfare states for decades, which is really, really expensive. And try to get the voters to change. Okay, I'm French. You mean I have to retire? Before 50 years old? Oh no! And they go in the streets and they burn garbage, right? It's complicated. But getting back to your point, Lou, about gold has been going up so much. How can it possibly go up more?
Well,
and if others may finish the thought, but the thing is, as we discussed earlier, when we're commenting on our precious metals portfolio, is just because it's gone up, say 200%, doesn't mean it's time to go down. The trend is the trend until it's not. Yeah. And you want to definitely try to ride that to maximize gains. Sorry to interrupt you.
No, 100%. My personal opinion, as long as these foreign countries, foreign central banks continue to invest and put gold into their portfolio, I think that's going to probably continue.
Again, not just that. We have a lot of commodity clients and investors around the world. It's just it's really a complicated situation. But at the end of the day, gold, unlike silver, which has a lot of industrial applications, gold ain't really good for a lot of stuff except really high performance circuits. It's rarely used for that, a small percentage of the output, and jewelry, but it's really just a store of value. It's kind of like crypto. It's worth what somebody's willing to pay for it.
Absolutely.
And eventually, if history is any guide, this will turn, and it could be a pretty ugly slide, not just for gold, but U.S. markets, stock markets. One last thing I'd like to mention on the currency trade is when the dollar goes down, what happens, fellas, to the value of non-U.S. stocks and other goods?
Oh, they go up.
Big time,
yes.
Right? In direct proportion.
Which is why internationals, did relatively well, better than usual last year.
Yeah, and that's even in the countries whose stock markets themselves are doing well, currency is really such a big factor. So if I buy a share of stock in France, right? Say it's the franc and the dollar are parity, the not, but say it's even money. Now the dollar is worth half as much. That means that position in French stock is worth twice as much in dollar terms. So that's another thing to consider. Anything else? We've kind of just really had a free-wheeling discussion here more than usual, but it's been interesting. But anything else you'd like to add before?
No, I just want to mention. I just want to say that as we're going through our quarterly reviews now with clients in the first quarter, our portfolios have done really, really well so far in the year. I know it's early, but we've done really well in comparison to the S&P, Nasdaq.
Well, from a compliance standpoint, so we don't have to run this up the legal pole. Let's just say that we are, in our view, and my strong view, we've done extremely well. Now, not just this year. Last year was another really fantastic year, I think, for many of our portfolios. But for that detail, please get specifically with your personal wealth advisor, Lou, Anna, or Corey, that can actually dig into details for you. But I'm very happy. You happy?
Yeah.
You happy?
Happy here.
So that's a wrap. And once again, thank you so much for watching Smarter Money Matters. It really does. Next time we'll be talking about private credit, alternates, private equity, some of the dangers lurking in these shiny new investment vehicles. See you next time. Bye-bye.